Hey everybody, how you doing? Welcome to a video today I thought I'd put together on my day off. Today is Monday, June the 19th, 2023. It's Juneteenth, and so the markets are closed today. And I thought I would do a video today and have a little chat with you guys about how you can make potentially 355 times your money um, buying into an AI stock, artificial intelligence, which is dominating the markets, as you are probably well aware. There's a stock out there called C3.ai Inc., and the stock symbol is AI, which is just perfect. You can't ask for anything better than that. Here's the symbol and the chart of the stock from just Friday. Don't mind my bald head up here. Here you go, right here. C3AI Inc. Stock symbol AI, trading at 44.31 a share. And this stock is really popular right now with a lot of traders. There are people who believe in the company like wholeheartedly. There are those who don't. There's a huge short position on the stock, and there is talk about this company could become worth a lot of money. And what I thought I would do first is to kind of, some of you skeptics out there, and again, it's okay, you can be a skeptic. Some of you skeptics out there are saying, Bruce, what are you talking about making 355 times my money? You're just, stop with these kinds of pie in the sky theories. And I thought, why don't we talk about an example of where if you were an investor early, you could have made a ton of money, even more than 355 times your money. And what stock am I talking about? I'm talking about this company right here, this little iPhone maker, Apple Incorporated, trading at 184.95 after hours on Friday night. This stock, if you go back to the beginning when Apple first went public, here's a chart going back to 1985. You could have bought this stock December the 12th, 1980, at $22 a share when they went public. However, since they've been a publicly traded company, Apple has split their stock numbers of times because as the shares went up in price, they would split the shares so that the stock price would come back down again. And you'd have more shares than before, but they would trade at a lower price, and they went up and they split them again, and so on and so on. They have done 7 stock splits since they became a public company, Apple. The first stock split took place 7 years after they went public. They went public in 1980. In 1987, they did a 2-for-1 stock split. In 2000, 13 years later, they did another 2-for-1 stock split. In 2005, 5 years later, another 2-for-1 stock split. What does that mean? It means that if you bought one share of the company back in 1980, by the time 2005 rolled around and they've done a 2-for-1, a 2-for-1, and a 2-for-1 stock split, you went from 1 share to 2 shares to 4 shares to 8 shares. You now have 8 shares of the company. In 2014, they did a 7-for-1 stock split, which means now you have 56 shares for every 1 share you originally purchased. And in 2020, just 3 years ago, coming up this August, a 4-for-1 stock split was done. And that means that for every single share you bought in 1980, you would now have 224 shares of Apple. And Apple today is trading at $184.95 a share. And you'd have 224 of them for every one you bought. So the Google searches, if you look up Apple history of Apple stock, they'll say stuff like, if you invested $1,000 in Apple stock in 1980, what would it be worth today? And the guess, my number is about $1.8 million. So your 1,000 would be worth 1.8 million. If you take it all backwards and look at this chart again, right here, the chart, the price of the stock way back here, I'll come up from underneath here. In 1980, January 1980, it was 10 cents a share, because you divide the 224 for one stock splits. You divide that by the current valuation, you come out to a dime a share. So that's how that works out. All right. So now let's talk about AI. This company that is being talked about, I saw an article today on my day off right here. 7 AI companies that could become trillion-dollar companies. All right. Just one quick look at Apple, for example. The shares here, 52-week range right here. Sorry. Yeah, I'll do it right here. 52-week range, 124 to 186. And then over here, market cap. You see that right there? Market capitalization, $2.91 trillion. That is what the company is worth. Now, this headline here that came out today was talking about 7 AI companies that could become trillion-dollar companies. And the one they talked about was AI. 3C.ai, symbol AI, has a robust approach to empowering organizations to embrace AI applications at scale. Now, what does this all mean? I mean, you can read these articles yourselves. The bottom line is that the AI corporation, C3.ai Inc., produce software and allow businesses to become far more efficient using artificial intelligence in their systems. And that helps them reduce overhead by reducing their cost or number of employees. And it makes the AI, their accounting department far more efficient. Their production department, their allocations, their shipping department, their source of raw materials, their just every part of the business becomes that much more efficient, much more quicker, and much more accurate, especially on these mundane tasks that can take hours for humans to do. AI was created 3 years ago. They went public 3 years ago, and their thought was that they would produce product customized for their clients on a subscription basis. Their thinking was, well, we'll create this software that'll make these companies way smarter and way more efficient, and then we'll charge them a yearly fee to be a subscriber. You can't own this stuff. You can only kind of rent it from us. A year ago, they realized that's not the way to go. The way to go is to sell a package to our client. And every 2 or 3 years, when technology levels up and goes a little higher, we sell it again. Rather than have you subscribe to technology that might go stale on you, we'll sell you the package today and we'll sell you a new package tomorrow. It's kind of like what Apple did with their computers. They sell you a computer today, and in 3 years, the computer is so advanced, so much more powerful, has so many more features. They sell you the next one, and the old one you give to your kid and you replace it. That is what AI has decided to do. And this is catching fire because what has happened at AI in the last year is instead of having 10 and 15 prospective clients, they now have 50 to 60 prospective clients, and their phone is ringing off the hook because every corporation, every government, every organization that needs AI intelligent software is searching for it. And here you can buy it. And the other thing about this deal is instead of negotiating for a year to make a deal work for a buyer on a subscription basis, the deal is done in 60 to 90 days. It is a customized package for your company. Here it is. It's X amount of millions of dollars. And if you want to upgrade to the newest version, we'll get back to you in a year or two with another updated version, and you can upgrade to the latest version from existing clientele. They'll just resell it again. Brilliant move forward. Okay, so this analyst or this writer is thinking here, this could become $1 trillion company. Well, what does that mean for you as a potential shareholder of this company? Because right now, if you take a look at this chart right here, this little key data, the high and low, 52-week high and low for the stock is 1016 and 4887. The market cap of the company right now is $4.99 billion. There's 108 million shares outstanding, 90.6 million publicly floating. And if you go right down to here, you notice that, see that short interest right there? There's 32.33 million shorted as of the 31st of May. And that represents 35.6% of all the shares that are out there of the float. And this number right here and this number right here gets me excited because when I see those two numbers, my heart goes pitter patter and I go, oh, 30+% of the stock is shorted. And we have analysts and others calling for this to become a $1 trillion company. Do you know that at 5 billion today, to become a $1 trillion company, that's a factor of over 200%. I mean, that's a 200 times. The stock all time, not just in the last year, but in all time, back in January 2021, you see that right here, the shares were over 150 a share. Notice the chart over here. I don't know, you can't see it. Just way over there, you see the 150 level. The stock was probably 155 bucks a share at one time in its history. So right now at $44, it's not at its all-time high. Although if you watch CNBC and other networks out there, and they talk about AI, they say, oh, it's up 200, 300% in price in just the last few months. You should be very careful about this stock. The stock's been 4 times as high or 3.5 times as high already because it was an IPO a few years ago when they raised over $1 billion to go public. They got 750 million bucks cash in the bank. They're in really good shape, and their sales are expected to take off, which is why one of these guys says it could be a $1 trillion company. All right, so if you buy the stock, you buy 100 shares of the stock, which is enough stock to write an option against it if you wanted to bring in some option premium money. You need to pay $4,431 to buy 100 shares at $44.31 on the aftermarket. That's what you'd have to pay. Here's the aftermarket price right there, that big bold price right there. However, you could get your hands on 100 shares. Cheaper than that. You can control 100 shares by buying a deep in the money call option. Out to January 2025, you can buy a call option on this company and buy yourself a $20 deep in the money call for about $25. In effect, it's like 60, 70 cents of premium. It's really a cheap way to go. It's a good way to go. So for $2,500, you could control 100 shares of this stock. And you could turn around right now, the minute you buy that call, and you could then write a call option against that call option. That's called a poor man covered call. By the way, if you want to understand how all that works, as far as how option writing works and whatnot, you go here to my website and you'll find my classes over there. I'll just leave that running. First of all, if you want to buy the call for $2,500, now you control 100 shares. You have the right to buy 100 shares for 20 bucks a pop, which is $45 a share total price between now and January 2025. Okay, I'm not saying the company's going to be a $1 trillion company by January 2025. It took Apple a long time to become a multi-trillion dollar company. Today, it's $2.9 trillion. And it went public in 1980. This is 2023. We're talking 43 years. But what if this company, AI, the shares are going to hang around $44 to $50 a share for the next couple of months? Is there a way for you to protect your investment against a down dip, and or can you be paid to hold this stock nicely? And you can. What you could do is you can write a January 2024 contract against your contract at like $50 or $55 a share exercise price. In other words, you're saying to the world, you can buy shares from me for 50 bucks a share. You can buy the AI shares off of me for 50 from now until January of 2024, 6 months. You got to give me 1,100 bucks right now, 11 bucks a share. Give me 11 bucks a share and you got it. You can buy from me stock at 50 bucks a share. Well, you put up $2,500 to buy one call option. Now you've just hauled in $1,100 in cash to write a call option. You're now into this deal for $1,400. You're into 100 shares for $1,400. Now, the shares are at $49.99 in January of 2024. They don't go over 50. The $1,100 you've been paid is yours to keep. You get it right up front right now. The minute you write the call, create it, you've got the 1,100 in your account. You can keep it. You don't have to give any of it back. If the shares go to $55 a share by January 2024, that call option you sold for 1,100 is actually worth $500 because the stock's at 55 and you are offering the stock at 50. The call is worth $5 a share. With no time left on it, it's a $500 contract. You'll buy it back. You'll keep the $600 differential. You received 1,100, paid 500 out, keep 600. You still have your deep in the money call. The $20 call option, by the way, is now worth $30 in book value because the stock's gone up $5 too. Actually, it's gone up more than that. It's at $55 a share. Your call option is worth $35 a share. You're up nicely on that contract. Your 2,500 is worth 3,500, and you made 600 on this contract that you wrote and bought back. What are you going to do now? You can write another call for 6 months out. You can write a call for next summer, and you're thinking, well, it's a $55 stock. Why don't I write a $60 contract for 6 months? I'll bring in 1,100 for that one. It's 5 out of the money. It's got 6 months to go. I'll bring in 1,100 more. You made 600 on the first contract. You're now adding 1,100 more in additional cash. Again, that's $1,700 you're sitting on. In effect, your risk exposure on your contract is $8 a share. It's a $55 stock. If it goes to 60, the $1,100 contract you wrote is yours. It's all yours. You've got now $1,700, no obligations against it. You can do whatever you want with that money. Buy more deep in the money calls, totally up to you. In the meantime, if you believe that the company could become a $1 trillion corporation, and you did buy these deep in the money calls, and you didn't do anything, you just bought those calls, and you're sitting there with your arms folded going, I put 2,500 on the table for one contract. I put 25,000 on the table to buy 10 of these contracts to control 1,000 shares. I want this stock to go up so that the company is worth $1 trillion. Well, in theory, the stock would have to run up to $8,898 a share. That equals a $1 trillion corporation. You are into the stock using deep in the money call options. Each call option that you bought for $2,500 is now worth I'm doing my math here, $8,870. You've made 355 times your money by buying a deep in the money call and waiting for the stock to reach $8,898. But you only have until June or January 2025 for this to happen because your contract only lives that long. Now, if the shares happen to be trading at $100 a share by January 2025, let's just say, your $20 contract is worth $80 book value. You paid $25 for it, or $2,500. It's now worth $8,000. You'll sell it and you'll buy a new contract, good till January 2027, perhaps. But you won't buy the $20 contract. You'll probably buy an $80 contract, much closer to the $100 value. $20 in the money, like you bought this one for $20 versus a $45 stock. You'll probably buy quadruple the number of contracts, though. Instead of having 10, you'll have 40 for the same amount of money. And if the shares go from 100 a share to $8,898, you will have 4 times the number of contracts going to that level. In other words, you don't make 355 times your money. You're probably going to make 1,400 times your money. Way better than Apple ever gave anybody. Not a bad scenario. Anyway, we can fantasize about this all we want. The reality is this. If you buy a deep in the money call on AI now, and it's a $2,500 cost, and you turn around and immediately offer a contract against it, you write a call for a $50 exercise price, or you want to go to 55 or 60, you can do that. And you can bring in probably $800 to $1,100 in cash against that outlay of $2,500 per contract. In other words, 10 of these, 25,000 out brings 8 to 11,000 back. You've just reduced the risk factor to you of this investment for the next 6 months. It's an insurance policy. If the shares do go up in price, you will gain on your deep in the money call, and that call you wrote, you'll buy back either what you paid for it or even less than what you sold it for. You'll buy it back for what you sold it for, or buy it less back for what you sold it for, and have a gain there as well, allowing you to do another rollover going forward. I can't help you. If the shares go right to $100 a share in 3 weeks, all right, from 45 to 100 in 3 weeks, you've got good news and bad news. The good news is that your deep in the money call is now worth $80 a call right now. It's $80 in the money, and it's going to be trading at $82, $83 on the open market. You pay $2,500 for it. Way to go. The bad news is if you brought in $1,100 on a $50 contract, that contract is now trading at least $5,000. So you got $1,100, but you got to buy it back for $5,000. You're going to lose $3,900 on the call you wrote because the stock went up immediately. Didn't want to do it quietly and calmly. It went violently higher. However, your deep in the money call went from 2,500 to 8,000. You're up almost $5,000 on that one, and you're only down 3,900 on this one. You're still richer. You're actually richer. You'll buy back your call that you wrote, and you'll write a new call against it. You're now going to write $120 calls, and if you go 6 months out, you'll probably get 15 or 20 for those, and that's $1,500, $2,000 additional cash coming in. And you keep your deep in the money call worth $8,000 plus. You have till January 2025. It's only been a month. Wants to go to $200 a share? Here we go again. But if it only goes to $120 a share in the next few months, your call that you wrote, the $125, is worthless. You keep all that money you brought in on the second batch of calls you wrote, and your call option went up anyway because the stock went to $120. It didn't go to $200. So you're on your way to $8,898 a share. Great. I love it. You want to do rollovers of your calls you're writing or the deep in the money calls you own? Great. More power to you. You can ride the wave all the way up, or do nothing and just buy deep in the money calls, or do absolutely nothing and just buy the stock and buy 100 shares or 1,000 shares. How much money have you got? Have you got $45,000 lying around? You can kind of get 1,000 shares of these shares and then fold your arms and wait for them to go to $8,898 a piece. It's $1 trillion corporation. You're going to have to suffer the highs and lows in the meantime with no income coming in. But if you've got that kind of cash that you can put in there and just let it ride, well, more power to you. I like the idea of utilizing less cash to control more stock through deep in the money calls and writing call options for income right now. I want the money in my hand. I want that insurance premium in my hand. I like gambling with other people's money is kind of the way I like it. A few thoughts for you on AI. Have fun with the numbers yourself. And if you want to learn how to write options, head over here to the website, stockmarkerswithbruce.ca. You'll find my homepage right here. Then you'll find my link to the classes right there. There's your instructor. Attention students, classes in session. And here are the classes. Number 1, number 2, how to buy and sell call options, how they work, how to write them, using different strategies to profit from them, how to avoid mistakes, earning income from writing put options, spreads, how to do butterflies, how does Bruce do his picks, number 11, using poor man cover call writing strategies to quit your day job, rolling over strategies, stink bids and stink offers, psychology of the markets, how to maximize profits from the market. And then here's a number 15 class we just did a few months ago, advanced poor man cover call writing strategies. This is what you want to be doing. Check out those classes when you can, learn how it's done, and let the options market compensate you for the risk you're taking on any investment you're making, bring an income in. And in some cases, many cases, viewers of this channel have figured out, you know what, Bruce, you tell me what to do here with these poor man cover calls. I can write so many of these. I don't have to work anymore. I don't have to go to the office anymore. The amount of income I can bring in from writing call options against my deep in the money call options, way more than my paycheck every 2 weeks. What am I working for? I can just be a money manager. I like this idea. Anyway, if you have any thoughts, let me know. Join me Monday to Friday live on this channel. We cover the markets 1 hour before we open, 8:30 Eastern until 10:30 Eastern. We're here for the first hour of the trading day. You can become a member of this channel and become one of these Gold Bagel members, and you'll get a Trade Alert show every day at 8 o'clock, half an hour earlier. And every Wednesday night, primetime live with Uncle Bruce. You can ask me any questions you want about writing options, the markets themselves, what's going on. Would love to have you join us. Thanks for hanging out today. Good to see you all. Thank you, everybody. Have a great rest of your day off, and we'll see you all tomorrow for another day of fun trading. Take care, everybody. Bye for now.